All right. Good evening, everyone. So we'll get started for today's session over here. Okay, so today's session over here will be covering on a strategy, or I would say a methodology that we talk about market structure. Or there are terms like, order flow, etc., SMC, At the end of the day, I would say that they're all essentially kind of a similar principle. Okay, the name might differ itself, but I think at the end of the day, it's not the name that's important. I think it's the methods, the principles behind it. Okay. So for today's session over here, as we go through, if let's say you have any questions, just feel free to put it into the chat box. Okay. I'll be kind of monitoring it as well. Okay, and take a look at if you guys have any questions. I'll see if we're gonna answer it on the spot, or we're gonna have the later part where we kind of address those questions accordingly. Right. So without further ado, I'll dive into the slides over here. And then of course, I kind of rotate between the slides as well as the charts to highlight some of the principles, in the kind of active and live market environment. Okay. So very quickly, I'll get started by showing you the foundation first. Okay. Now, what I mean by foundation over here is kind of what we call the basic understanding of some of the terminologies, are principles that you definitely need to be very, very familiar with. Okay. So the first thing here, of course, is the understanding of structure. Okay, so in terms of like this method over here, we have generally two types of structure. One is what we call bullish market structure, where the market is essentially developing higher highs, higher lows. We call it an uptrend. And then we have the bearish market structure. Right. Now, the thing about this technique here is that we do not have what we call a range market. Okay, now the market can be kind of choppy in a sideways environment, but every environment, every instances, right, we always have a definitive kind of bullish market structure or bearish market structure, right? So what I mean by that is that the market can, be kind of going up very, very slowly. Okay, it might seem like in a range, but with this definition, it's either gonna be breaking new highs or the market is essentially breaking new lows. Okay, so just bear in mind as we progress, right? Sometimes we might see in a range bound environment, but using this technique here, either the bulls are in control or the bears are in control all the time. Okay, so we have also this term here called the break of structure. In short, the term that we're going to use is called BOS. Okay, so when we have a break of structure, we need the price to actually be breaking and closing. Okay, so I'll jump into a chart here to kind of cover a little bit on this principle. Okay, so over here you can see, okay, I've kind of put a horizontal line. Right, you can see over here, this example, price did break this low, but it's actually a wick, right? It kind of tag it, break it, but did not close below it. Okay, so this kind we don't consider it as a break of structure. Okay, now another example to highlight. Okay, you can see over here this high, the market actually broke it. Okay, but at the same time, the candle actually managed to close above that high. Okay, so that is what we call a break of structure. Okay, just very, very quickly, the basics of things, understand the difference between what we call break of structure, okay, where we have the candle break and close. Okay, so that's very, very important. So that's some terminologies, right? And then of course, we have the common idea of like swing high, swing low. Okay, essentially those are like significant turning points in the market. Okay, now if you're very, very new to technical analysis, you may actually struggle a little bit in terms of how to identify swing highs and swing lows. Right, one way to help you visually identify them is to use some indicators to assist. Right, you can actually use the indicator called fractals. Okay, so over here, if you're using TradingView, okay, you can go over to this indicator search bar, type fractal. You can use the William fractal over here, okay, to help you identify, right? So it's not the best, but it kind of help you a little bit, right? Every time you see a green arrow at the top, those are significant turning points. If you see the red arrow below, those are the significant turning points at the bottom. Okay, so what you can do is you can use this indicator very quickly, highlight, oh, this is actually a swing high. The market came down, established a red one here. That's a swing low. It went up, swing high, come down, swing low, went up, swing high, come down, swing low, right? So you can use this indicator at the early stage to help you. But of course, if today you're a bit more experienced, right, what you'll be realizing is that you technically do not need that, okay? Because you can start to observe the market moves in waves, it moves in swings, right? So you have this move up, right, move down, move up, move down, again, up, down. So you can actually easily identify these swing points with a little bit of experience, okay? So to utilize this technique, you need to be familiar with what we call market structure. To identify bullish market structure, bearish market structure, you need to then understand what break of structure means, BOS. Okay, and in order for you to identify a break of structure, you then also need to be able to be identifying swing highs and swing lows. Okay, so BOS is the short form of break of structure. Okay, and the principle over here is every time we get a break of structure, we expect the market to pull back. Okay, so I'll show you some examples of illustration, and then I'll walk you through in terms of a live chart. Okay, so this one here you can see, right? As the market is essentially going up, okay, we form a swing high, it pulls back from a swing low, and then the market decides to go higher, break and close above this high. So that's a break of structure. Okay, so at this point in time, right, the market is here. At this point in time, we can say that we are in a bullish market structure, simply because we have what we call a higher high, higher low. Okay, and this higher low is confirmed when the market break and close above this high. Okay, so if I kind of give you another example, okay, let's remove that. Okay, and let's say right now the market does this, right? We have a low, market move up, it comes down, okay, and then it starts to bounce. Okay, now at this point in time, we only have a low, we have a high, but we wouldn't know this is a higher low. Okay, why? Because the market hasn't break above this. Okay, so if I backtrack a little bit, at this point in time, the market can easily continue to go lower and never break this high. Okay, so need to be very clear, right? When we are at this stage, we do not have a higher high, higher low. And therefore, at this stage, we can't say that we're in a bullish market structure. The market needs to go higher, break and close above this high, before we can conclude and say that this is a bullish market structure. Okay, so same thing, right? As the market is coming down, okay, and at this point in time, we have a high, we have a low, but we can't conclude that this is actually a higher low. Sorry, a lower high, right? We only can conclude this is a lower high if the market continues to go lower and manage to break and close below. Then we can say, oh, the market has transited into a bearish market structure. Okay, so this understanding is very important to help you kind of mechanically define whether the market is right now in a bullish state or bearish state. Okay, now very quickly, let's go over some examples on the chart. Okay, now let's say we take maybe one of the simple ones that we can work on. Okay, let me find a simple one that we can work on. Okay, right, let's just take gold for now. Okay, on this particular time frame, of course, you can play around with multiple time frames, right? Depending on trading, but for this example, we just stick to one of the clearer ones. Okay, so today, if I'm going to take an example and start off with this obvious high, right? You can see the market came down from this low, does a pullback. Okay, in fact, then if it forms a lower low before it forms a pullback, right? So let me backtrack a little bit. It came down all the way here from a low, pullback. Okay, from this high, and then at this point in time, the market decides to come down. You can see that we managed to break and close below. Okay, so at this stage, we are in a bearish market structure. The market pulled back from this high, coming down a little bit, but has yet to break this. Okay, so if you kind of zoom in and say that I only want to focus on this area, then we technically do not have a bullish market structure as well as a bearish market. We don't have anything, right? But of course, if we start to take in a little bit more data points, okay, then right now the market is in a bearish market structure state, okay? Because why? When it's coming down, the bears are in control, okay? Giving you a little bit more example, okay, let's see. Okay, dollar yen is obviously an example that's moving up, right? Why? Because it's low, going up, pulling back, the market able to break and close below this high, forms a new high, high, low, bullish market structure, pull back, did not break this low, continue to move higher, break of structure again. Okay, so up to this point in time, we can see very clear bullish market structure. Okay, so that's how easy it is and how effective it is for you to help decide, right, and define whether the current market state is in a bullish structure or a bearish state. Okay, so that's what we mean by that, right? So with that said, okay, that's where you need to then again understand, right? If we're in a bullish market structure, the lows are stronger, right? The demand are in control. That's how it can create new highs. Okay, and vice versa, right? If the market is coming down, then the highs are more stronger, right? Highs are stronger, right? Because the bears are in control and it's literally pushing prices lower. Okay, so as we're in a bullish market structure, we need to understand that the lows are strong. In the bearish market structure, the highs are strong. Okay, and oftentimes if you can see huge momentum candle, big candles, right? That means that the momentum is there. It means that there is a strong demand or supply coming in prior to that move. Okay, so the whole idea of this is today, if you're in bullish market structure, again, this is logical, right? If you're in bullish market structure, you want to look for buy. If you're in a bearish market structure, you want to look for sell. Okay, it's as simple and straightforward as that, right? So again, if you come back to this illustration, right? Okay, if today we're in bullish market structure, all the lows are considered strong lows. And what we expect is that the market would respect this and it will tend to break highs. Okay, so again, if this comes down here, as long as this low remains intact, okay, what we expect is the market to continue bouncing up, and this will be a weak high, and we expect the market to break that. Okay, vice versa if the market is coming down. Okay, so every time, another thing, right? Just now I mentioned, every time we have a break of structure, we expect the market to pull back. Every time we have a break of structure, we expect the market to pull back. Okay, same thing as the market coming down, right? We have a break of structure, we expect it to pull back. We have a break of structure, we expect to pull back. So the whole idea of this is that the market tends to move in waves, up, down, up, down. It never really go like one direction all the time. Okay, so this is also an important principle because you don't want to be jumping into a buy trade at a high point and you want to be selling at a low point, right? You always want to wait for the pullback. And that's what we always expect. After a break of structure, expect a pullback. Okay, so moving on from there, okay, the market will never trend in one particular direction forever. At some point in time, it's going to reverse. Okay, so how do we know when it's likely going to reverse? Is that when we start to see a trend shift. Okay, now what I mean by trend shift, again, just jump straight to illustration to explain to you as compared to like the text itself. Okay, so initially you can see, right, we are forming higher highs, higher lows. We have a break of structure to the upside until at one point in time, the market decides to come back down and break the previous low. Okay, break and close. Okay, so initially we were breaking highs, and then at one point in time, the market decides to break the previous swing low. This is the moment in which we start to identify, okay, maybe the bullish trend is concluding. We need to be careful, right? So the market make a lower high and then it does another breakout structure. At this point in time, we can say that the market has shifted bearish. Okay, but from here, very, very quickly, the market reverses and does another breakout structure at the top. So at this point in time, again, we were bearish structure turning bullish. Turning, right? Not confirmed yet until we get this leg when the market break and close above. So we have higher high, higher low. Okay. So this illustration, right, basically shows you from a bullish structure, turn into a bearish one, turn back into a bullish one. Okay. Now, if you look at it from a larger perspective, then obviously this whole thing is kind of like ding-donging, right? Bullish to bearish, bearish to bullish. So it's not an easy environment to be trading. Okay, but I'm just using this as an example to show you what I mean by turning, right? Trend shift. Okay. So when we look at a chart, okay, sometimes we do experience that. For example, if you take a look like Aussie dollar, okay, so from this high you can see, you know, we came down, okay, technically this becomes a high, you know, and then of course we have like ups and downs inside. We have this break of structure here. The market came back down, break the structure at the bottom, went back up, break the structure at the top, and then it continued to consolidate. Okay, so we are in a, you know, very, very range bound environment. But if you look at it from a larger time frame, you zoom out a little bit, right? You can see that this high hasn't been taken out. Okay, and obviously this low hasn't been taken out as well. Okay, so what we know right now is that this low is in control of the demand, right? And this high is basically in control of the supply, right? So depending on the time frame, okay, depending on your horizon, on how much data you're looking at on your chart as well, okay, that make a slight difference between what structure you're looking, whether bullish or bearish, okay. But today, okay, don't overcomplicate stuff first. I just really want you guys to be like very clear on the basic terminologies and foundations of things, okay. So what is swing point? I think you need to be very clear. What are the definition of break of structure? What is high, 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 low, lower, low, lower, high? How do you define a bullish market structure and a bearish market structure? Is very, very important. Okay. So again, if I just use some example on different time frames, okay. Now let's say we go to gold. Okay, gold on the daily time frame is very, very straightforward. Okay, you have kind of mark out the chart a little bit for you guys, right? You have this low over here. Okay, so that would form what we call a daily swing low. Okay, the market make a move higher. Okay, and then at some point in time, it will do a pullback. Okay, a significant pullback. Now, how do we define a significant pullback? There are multiple ways you can define it. You can define it via a fixed minimum size of movement, whether is it in pips, in terms of gold, it can be in dollar and cents, or you can utilize Fibonacci here and say, okay, if the price pulls back 50%, that's a pretty significant pullback. Okay, so why is this important? If today we have a significant pullback, this indicates that this is an obvious swing high. Okay, so the idea is you want to identify which one is a clear swing high, right? So the market moved up here. You can see a little bit of a pullback, and then another move up, another pullback, another move up. You know, you don't want to identify and focus on all the swings high here because it's just so small. Okay, even maybe this one pullback is not significant enough until the market did this 50% one. Okay, so what you want to also do is you want to identify where are the obvious turning point. Okay, so in this case here, we can use a simple 50%, right? If the market pulls back half of it, then this is quite significant. Okay, so we can start to establish, right? This is my low, this is my high because of that significant pullback. After the pullback, the market didn't break the low and it continued to move higher, and it actually managed to break this high and close above it, right? So that becomes our BOS, break of structure. Okay, now if this is a break of structure, what we need to then identify is where our new swing low is. Okay, so how we do this is basically when the market break and close above, we want to identify the lowest point prior to the break. Okay, so you can see, right, from here to this break, okay, where is the lowest point? Here. Okay, so what this means is that our swing low now has shifted towards this low. Okay, and then the market pulls back, sorry, goes back up. It does a slightly smaller pullback here. Is this going to be a swing high? We just basically check. Okay, if today we use FIB, did the market pull back 50%? No. Then we don't call this a significant pullback. The market continue, And then at this point in time, we have this high here being established. Okay. So how do we follow on the analysis from here? We look at FIB. Did we get a 50% pullback? Not yet. Okay. So technically, this is a temporary swing high. But if the market continue to go higher, then we have a new swing high. If the market comes back down and tag the 50%, then we know, all right, that's our swing high. Okay. We have a strong low. We are in a bullish market structure because of a break of structure to the upside. We have a strong low, we have a weak high. So as long as price respect this low, eventually our expectation is it will continue to go higher and it will break this high. Can follow that thought process, right? Okay, so that's what we use. How we identify swing points, market structure, break of structure, swing high, swing lows. Okay. It can be applied on any market, right? So if you take a look at this here, okay, so you need to then obviously pick a starting point, right? So I always like to suggest you want to start off with maybe on the higher time frame, maybe on the daily on a H4. You want to zoom out a little bit to really identify, all right, where the market comes from. Okay, you can see from here the market came from the top coming down. And then with some experience, of course, you can go a little bit faster. You can see that this is actually a swing high, right? Came down, this didn't really break that low. And then market continue higher, right? So what happens here is this is a breakout structure. You can see that, right? Very, very clear. So if this is going to be a breakout structure, okay, where would be the swing point? The lowest point before the breakout structure that would establish this here as our swing low. Okay, and then since then, the market has pulled back quite significantly. So what happened is this is our swing high. Okay, but this swing high is considered a weak swing high, right? Why? Because we have a breakout structure to the upside and we are currently in a pullback phase. Now, what this means is as long as price is above the swing low, we are going to expect the bulls to be in control and the highs to be broken. You can follow the thought process here. Okay, so what this means is that this one here would likely be a weak swing high and we can expect the market to eventually tag it or even break it. Okay, and of course, as long as this swing low remains intact, we're in a bullish market structure. Okay, now we are in a range, right? So you can see here crude oil, if you look at this current recent state, we're in a range. But as I mentioned, using this principle, we always have one side in control. Now, in this case here, the bullish market, the bull market is in control. We're in a range, but the bulls are currently in control. Okay, so that's something you can know, right, from using market structure. Okay, hopefully up to this point, everyone can follow through. Right. So then, of course, using the same principle over here, we also have what we call internal, right? So kind of like the idea of like fractal in nature. Okay. Okay, so this is basically what we call fractal in nature, where on the high time frame, we can use this principle, and then on going down to a lower time frame, kind of minimal, kind of similar principle as well. Okay, so we use a slightly different term for smaller time frames, right? So usually we play around with like minimum 2 to 3 time frames. Right. So if you're working on the daily, then the H4 become our internal structure. If you're working on a H4, then the hourly become our internal structure. Okay. So the whole idea about internal structure is an early sign of a potential shift in direction. Okay. So we have this term called change of character, right? In short, CHOCH. And the whole idea is basically from bullish change to bearish, bearish change to bullish. The first sign of a shift, we label it as change of character. Okay. The principle behind change of character and break of structure is more or less the same. It's just the usage of it is different. Okay. So if you take a look at this here, this example, right, what we have is that we initially have a lower low, lower high, lower low, lower high, right? We have multiple break of structure here. And then at one point in time, the market decides to reverse. Okay, so this is where we consider a change of character, right? Because from bearish, it turns bullish. Then we have like break of structure, and at one point in time, we have the change of character. Now, this change of character, you can also see as a break of structure. It's basically the same. It's break of structure. The only difference is we can label it differently because that's a bullish shift to bearish. Okay, the first clue, first sign that the market is shifting, we put it as change of character. Okay, so that's basically it. Okay, the whole understanding of change of character is quite similar. Okay, so change of character has two indication. Okay, we can use it from the understanding where initially it's trending. Okay, initially it's going up. Okay, and then at some point in time we'll expect a pullback, right? So a change of character can be an early sign that the pullback is starting. Okay, which means the overall direction is still bullish, but this change of character tells us, all right, the retracement is starting. Okay, now we can also use change of character over here to establish the fact that, oh, the pullback is completed and we are now resuming the trend. Okay, so change of character, you can see, right, the usage here has 2 points, but both of them are basically telling us, hey, it's an early sign of a shift. Okay, because internally this is bullish to bearish, and then this is bearish to bullish. But the bigger picture perspective, we are still in a bullish market structure. Hopefully that makes sense. Okay, let me maybe now jump into a chart to kind of illustrate this example. Okay, see if we can find any, right? So I'll probably use crude oil again, right? This is on the daily scale. Okay, so if I backtrack a little bit, right? Over here, okay, maybe a little bit further back. Okay, so at this point in time, you can see, right, very clearly, we have a breakout structure. We are bullish to the upside. Now, after the market break above and close, what we expect eventually there will be some kind of a pullback. Okay, but how do we know the pullback has started? We can actually wait for an internal shift or change in character, right? So in this case here, you can see on the smaller scale, we have this low taken out, break and close below. Okay, so that's an early sign of a change of character. It doesn't necessarily mean that you want to like immediately jump in and sell, but at least it's telling you, all right, from a daily point of view, this may initiate a pullback. But as long as this low is still intact, overall trend is still bullish. Now, as a trader, can you trade the pullback? Definitely. Okay, if you're kind of looking at shorter term perspective and things like that. Okay, but of course, what I want to highlight is when you get that shift, this here is called a change of character. Okay, then of course the market continue to play out and things like that, right? So you can see once we get a change of character and the market starts to pull back, we can start to establish, all right, this is our temporary swing high. Okay, and we are in a pullback phase. Okay, and of course in this pullback phase, you can see internal structure being broken as well. Okay, so we have a break and close below. So on the lower time frame, we are actually in the bearish structure state. Okay, and then of course the market continue to move lower. We have break of structure, you know, pull back, another break of structure over here. Okay, and then at one point in time, on the lower time frame, if we just go down to the H4, you can see over here, right? This is actually a change of character, internal structure, right? If I go back H4, straight on the daily, that's your internal structure shift. Okay, on the H4 is basically the reverse. Okay, so when that happens, we know, all right, potentially this pullback is done. Okay, we are still in the bullish state. If this pullback is done, what do we expect? We expect this to go up and tag this high. We can follow the top process, right? So market then starts to move higher, right? So we have a very clear break of structure, change of character. The pullback is potentially completed. The market starts to move higher. And then internally here, we get another break of structure. Okay, and then we have higher low, higher high, higher low, higher high, right? Internally, that's what's happening, right? You can see, okay, so another break of structure. Okay, and then of course, we just play out the market, right? We move faster a little bit. Okay, then at some point in time, at this point in time, you can see, oh, we did not really break the previous high. The market actually decides to break and close below. What is this? Okay, this is initially a bullish move, turn bearish, bearish move, turn bullish. Now bullish move, change of character, coming down. Now, this doesn't mean that we are going to be in a bearish market structure. It just means that overall, internally, we are shifting bearish, but as long as I mentioned, this swing low remains intact, we are still overall bullish itself. Okay, so as the market play out to where we are today over here, okay, of course, you can see internally, okay, we have another break of structure here, but right now, we have another change corrector. Okay, so you can see that principle behind it, okay, and how mechanically we are defining bullish, bearish, change of character, as well as break of structure. Can follow the top process, yeah. Okay, so this one here, pretty straightforward, right? So this one is basically what I illustrated on the chart just now. Okay, after a break of structure, we expect a pullback. How do we know the pullback is starting? We have a change corrector. How do we know the pullback has concluded? A change of corrector. Okay, but overall, as long as price remains above this swing low, we are bullish. Okay, yeah? So that's the principle behind it. Okay, so of course, change of character can also be used for reversal. Okay, so as I mentioned, at the end of the day, change of character is an early sign of a shift. It can be a shift to indicate a pullback. It can be a shift to indicate the pullback is completed. It can also be a shift to say that the overall trend is changing. Okay, so in this case here, you can see this is an example where the trend changes because we have a bullish market structure. We have this change of character, but instead of just doing a pullback, we get a confirmation of a break of previous swing low. So this is no longer a pullback. Why? Because we get a break of structure here. So from a bullish to initially expecting a pullback to a confirmation that the trend has shifted. Okay, and on top of that, we get another break of structure here. So definitely from bullish to bearish structure. Okay, yeah. So that's the understanding behind it. Okay. Now, let's use some examples over here. Okay, I think overall this are okay. If I were to work on this example, just to give you an example on things, okay. Okay, so over here you can see from this high, the market came down. That's a pullback. We have a break of structure. So this becomes, okay, I'll backtrack a bit, maybe too fast. Okay. What we have over here is a breakout structure, right? So I think that one should be quite clear. Okay, because this is a breakout structure, where is our swing high? Our swing high is at the highest point before the breakout structure. So in this case here, it's going to be this high. Okay, so the understanding of this is as long as price remains below the swing high, we are technically still in a bearish structure, right? But after a pullback, what do we after a breakout structure, what do we expect? We expect a pullback. How do we know if the pullback is about to start? We wait for an internal shift in trend, change of character, right? So in this case here, you can see that, right? On the lower time frame. Okay, what do you have? You have this swing high, broken, break and close above, but it's the first opposite breakout structure, right? So what do we label that? We label that as a change of character because on the high time frame, that's your internal shift. Okay, so this kind of, at this point in time, this indicates that, oh, the pullback may be starting. Okay, so what do we expect? We expect the market to pull back, but as long as price remains below the swing high, we're still technically bearish. Okay, however, if the market can move above and break and close above this high, then we have a trend shift. Now, obviously, at this point in time, we wouldn't know whether is it a pullback or whether it's a trend shift. But what we know is that it's telling us, hey, the market is going up and follow the top process, right? Okay, so as it continues to develop, right, you can see we finally at this point in time gets a break and close. Okay, so when we get a break and close above, okay, this becomes a BOS. Now, if this is a breakout structure, okay, where is the lowest point before this breakout structure? Here. Okay, So then what we do is we now take this away. This is irrelevant already. We put it here, and then this now becomes outswing low. Can follow that, right? So at this point in time, we have an early sign of a potential bullish market structure because we have bearish turns bullish. But it's not confirmed yet because we haven't have a lower, we don't have a higher low and a higher high yet. We don't have that at this moment, right? So at this moment here is an early sign of a change of trend, but not confirmed, okay? So as the market continue to play out, this is where we are right now. Okay, now at this point in time, what do we have? We have a significant pullback, right? Do you remember that, right? As long as the market comes back towards 50%, we have a significant pullback. When we have a significant pullback, we can identify our swing highs. Okay, that is our temporary swing high. This is a pullback. Again, why is a pullback phase? You can see here, right? Change the corrector as the market comes down. We have all this. How do we know if this pullback is likely going to be completing soon and we can start to look for buy? How do we know? We wait for a change of corrector. Okay, so play forward a little bit. Okay, at this point in time, can you see? Swing lows, this highs has been taken out. Internal structure is taken out. So maybe this is telling us a sign that, all right, this pullback is done. Where can we expect the market to go? Weak highs. Okay, we can expect the market to go and tag that high, right? So if I move forward to where we are today right now, this is where we are at the moment. Okay, now again, we have another change of corrector here internally. So it kind of indicate that, all right, maybe the pullback is going to be deeper or whatever. But again, as long as price remains above the swing low, we are more inclined to look for buy. Okay, so you can see how mechanical that thought process is, right? So that's why simple terms like swing high, swing low, break of structure, change of corrector is very, very important. Okay, so how do we anticipate potentially where this would reverse back again? How do we know when the pullback is likely going to be completed? Again, we wait for the internal structure to be broken. Then we can say, all right, if you get an internal structure, change of corrector, then maybe we can say, all right, the pullback may have completed. Let's look for the upside. Okay, so far, hope that's clear. Yeah. So with all this said, okay, then the next thing here is to start establishing how can we look for trade setups, right? How can we look for opportunities to get involved in it? Okay. So that's where the strategy comes in. Okay, and that's where you need to understand a little bit more in terms of like how do I identify demand zone? How do I identify supply zone? Where is my structure area? Where's my order block? Okay. So I'm gonna share with you this very, very simple model. Okay, where we have some terminologies I think you guys should be familiar with, like market structure break is basically your BOS. Okay, so you have this obvious bullish market structure. You wait for the pullback coming into demand, which will cover how you can identify demand zone. Then you'll be looking to buy here, right? As long as price remains above that swing low, we are in a bullish structure and we expect the market to test the weak high. Okay, so again, the basics are important, and then you start to add on layers to that. Okay, so bearish market structure, you just flip it. All right. Now, how do we identify all the block? How do we identify demand and supply? Okay, one of the terminologies you need to be familiar with and be able to identify before you look for order block is this thing called fair value gaps, right? FVG. Now, fair value gap is created when the market momentum is strong, and AKA, if you see a huge candle body, that's basically, strong momentum. Okay, so give your example over here. Now we have a 3-candle formation, right? You can see your second candle is huge. Your first candle and your third candle did not overlap. Okay. This high, this low did not overlap. This is your fair value gap. Okay. Coming down is the same, huge candle body, first candle, third candle did not overlap. That is your fair value gap. Can follow, right? It's pretty straightforward. Okay, let me just show you some examples on the chart. take this here on the lower time frame. Okay. Can you see this one here? Okay, huge candle, first candle, third candle did not overlap. That's a fair value gap. Huge candle, first candle, third candle did not overlap. That's your fair value gap. Okay, bear in mind, we are not just like literally trading every fair value gaps. I'm just sharing with you how to identify those gaps. Okay, look at this huge candle. This candle and this candle did not touch. That's a fair value gap. Okay, but of course, this fair value gap here has been tested. You can see, right, the market came into it, have some reaction out of it. Okay, this fair value gap here has been tested just about recently as well. You can see, right, the market came back and tested. Now, this fair value gap here technically hasn't been really tested because we haven't really come into it. Okay, this fair value gap here, you can see, hasn't been tested as well. Okay, so the tip to identify fair value gap is basically look for the huge candle body. Okay, and then oftentimes that's where you're gonna find your fair value gap. Okay, so that's what I meant by this. Okay, now once you're able to identify fair value gap, then you'll be able to quickly look out for order blocks. Okay, because the simplest way to start identifying order blocks is to simply use your first candle that created the fair value gap. Okay, so I'll just jump back to the chart very quickly. Okay, zoom in a little bit. So in this case here, we have this fair value gap. Where is the first candle? The first candle is this, right? So we can easily identify that's an order block, right? That's the simplest way to identify. Okay, so in this case here, we have this fair value gap, right? Okay, this huge fair value gap. So where's your order block? The first candle that created it. Right? Now, you don't want to trade every other blocks, right? That's not the idea behind it, but this is more of like the steps to very quickly identify your supply and demand zone. Now, if you're a little bit more experienced, what I would share is that you can look at the candle pattern, and essentially when you have a fair value gap here, okay, which is coming down with momentum, what you want to look up for is the last bullish candle before the drop. Okay, that's your supply zone, right? So in this case here, we can take a look at this entire candle here, right? Because that's your green candle before the red one. And then it drops with momentum. This is your supply zone. Okay, if you look at this here, strong momentum to the upside. What is the last red candle before the push? Here. Okay, so if you want to streamline a little bit, that's your demand zone, right? Because the market actually creates the down move, consolidate before the strong push up. Okay, give you more example. Okay, you look at this here. This green candle is your supply zone, right? In this case here, it kind of like almost tag it already. So maybe this is not a very ideal area to look out for. Okay. That's another topic about testing or not. But initially, if you're identifying it, that green candle will be your supply zone. Why? Because the market push up before the huge momentum moves to the downside, right? So that creates an order block. Can follow the top process, right? Same thing here. What is the candle that creates this strong push? Okay, here, the green one, right? So that becomes your order block. And follow, yeah. Bear in mind, we're not trading every other order block, okay? But now we're just showing you how to identify them, okay? So that's the idea of it, right? Demand, supply, order block, okay? And the whole strategy is quite straightforward. We're essentially looking to enter a trade in the order block. Our stop is at the swing lows if you're buying, obviously. And then our target is at our swing high, right? And vice versa if you kind of flip it in the opposite direction, right? So this example, very nice reaction. Okay, tag into other block, bounce up very nicely. This one here as well, tag into other block, bounce off very nicely. Okay, so again, we are not straight away jumping into, oh, where's my demand and supply, and then we just trade it off, right? You want to establish your directional bias, you want to establish your market structure before concluding whether to buy or sell. Okay, now if I can give you an example on gold here, right? Okay, how do we work things around, right? So you need to define like what's the time frame you look out for. Okay, so suppose I'm going to work on like H1 and H4. Okay, so H4 becomes my higher time frame. Okay, so on the H4 here, what we have a bearish market structure, right? Because we can clearly see that this is a breakout structure as I highlighted. Okay, let me just put it down. Okay, and then where is our swing high? Our swing high will then be the highest point that causes the breakout structure. So that will be our H4 swing high. Okay, so since then, the market actually did a obvious pullback. Okay, and therefore, this is going to be our low point. Follow that thought process, right? Okay, so in a 4-hour time frame perspective, what can we expect? We can expect the market to continue to go lower and break this. Okay, as long as what? As long as this high remains intact. Okay, then the bearish market is in control. Okay. So right now, what do we have? Okay, we have an internal over here, right? We have an internal shift, and then of course we have a breakout structure. That's a pullback phase. And then after that, the market came down. We have a breakout structure here, which is the change of character, telling us that all right, maybe the pullback is completed, and we'll likely continue looking at the downside. Okay. So as of now, we can establish, right? Maybe you want to put in some notes, right? So what you can do is like H4 bearish structure, right? So you can't identify the high time frame, right? But maybe you're not trading on the H4, right? Maybe you're looking at lower time frame to execute. That's where you play around with time frame. Okay, but you understand, okay, on the high time frame, my primary direction is bearish. Okay. So if you go down to the lower time frame on the H1, for example, okay, what would you need to look out for? You want to have some kind of alignment, right? Okay. So as of this point here, you can see, okay, if I'm gonna take from this high, to this low, we have H1 breakout structure, very, very clear. Okay, then obviously this becomes my H1 swing high. And then the market can go lower. Okay, and if this is a breakout structure, my swing high will be where? It will be here. You can see that, right? Okay, but at this point in time, you can see that the market has also managed to break above the swing high, right? So this means that from a H1, we have shift from bearish to potentially bullish. Okay, so how do you manage this, right? So again, if I can put this here, okay, H1 here, we are in a bullish state. Okay, now if H4 is bearish, H1 is bullish, what we'll understand it from a perspective is that we are still pulling back, okay? Because if H4 is bearish and H1 is bullish, it means that on the lower time frame, we are pulling back. But as long as this high is still intact, we should be more aggressively looking to sell compared to buy. Can we buy? Yes. Okay, but understand that if we are buying it, we are looking at a pullback phase. Okay, so that's where the time frame comes in, understanding the different time frame structure. Okay, now if you go back to the lower time frame on H1, right? So we are in a bullish market structure state. Okay, so we can look at short-term buy, right? But how are we going to look at it? We then want to identify where is our order block. Okay, so you can see here there are some fair value gaps created, right? Where is the last candle that is bearish turns bullish, right? So we have this entire block here. Okay, from bearish, suddenly strong bullish, right? So that becomes an obvious order block. Okay, so one way to look out for it is obviously we can say if the market comes back down here, there's a good chance we'll probably bounce up. Why? Okay, because over here we have a breakout structure. Where is our swing low at the moment? Here. Okay, that would become our H1 swing low. As long as this swing low holds, we can expect one more pushback up. Okay, so you can start to see how this thing starts to play out, right? So if today we are looking at upside short term, okay, if you're more conservative, where would you target? Previous swing high. Okay, now if this pulls back, obviously this becomes our swing high, right? Because that would be the last high point that the market broke it. Okay, so of course, conservative, that's where your take profit is going to be. Okay, now if they continue to come down, you can start to see that this would start to create a supply zone. Okay, naturally, then that becomes your target area. Can follow the thought process, right? And of course, eventually, at some point in time, if this starts to form something like that, okay, what do we have? Okay, we have a change of character over here. And from a H1, we are starting to see from bullish to bearish. And on a H4, we are still bearish. At this phase, we have what we call an alignment. Okay. So when we have alignment, what we do, we look to sell it when the market pulls back to an order block. Okay. So this potential trade to the upside is what we call a counter trend. This here is called a alignment. Okay. Why? Because we are playing around with multi-time frame. And follow the thought process, yeah? Okay. Hopefully everyone is clear on this. Good. You can, use this in another example over here as well. Okay. So like, for example, this is H4 in euro dollar. Okay. On the euro dollar time frame, H4, sorry, no euro dollar. H4 time frame, what do you have? You have this break of structure. You have this as a swing high. Right? And then of course, we have like obvious weak lows here, right? The market is pulled back 50%. So this obviously weak lows, right? So what we are looking out for right now is that bearish market, expecting the market to come and break this. Okay, which means from a H4 perspective, will be bearish bias, right? Where on the H4 itself, where is that order block? Okay, this is one order block. You can see very obvious, right? Strong push and it come down. Of course, if you want to take it this area, that's also an order block. Because the market came down, does a little bit of consolidation and then strong fair value gap. Okay, so that's an order block at the top as well. But the thing here is, as long as price is below this H4 swing high, we are technically still in a bearish state. Okay, so if you go down to a lower time frame, do we have a alignment? Okay, we currently have that minor break here, change of character. That might be an early sign. Okay, so what can happen is the market may continue to drop, right? And then as we start to look out for fair value gap and supply zone at the top, we want to wait for the pullback, okay, to trade to the downside, right? But obviously now it's a little bit early because we only get an initial break. We don't really have an obvious fair value gap yet. Okay, you want to have some kind of a momentum candle to confirm that, oh, that's a reversal. Okay, so sometimes you just need to be patient a little bit, right? So that's another example of how we look at euro dollar on a H4 and H1 using this very, very simple principle. Okay, some charts are not as easy, right? Because the market may be like bouncing up and down and things like that. Okay, so you want to also kind of do a little bit of filtering, right? To identify like charts that are easier to work with. Okay. Good. Like for example, this one, right? On the H4, what do we have? We have an early sign of a change of character, right? Because that's definitely a break and close above. Initially, market is breaking lower, right? Break a structure, break a structure, break a structure. So this here is a significant reversal, potentially. Okay, and then where's our swing low? Here, lowest point before the break of structure, right? So that's your swing low. Okay, now if you go down to the, so after a break of structure, what do we expect? We expect some kind of pullback. Can we trade a pullback on the lower time frame? Yes, right? But you obviously need to go down to lower time frame, wait for some kind of a confirmation. Follow. So this one, let me just very, very quickly show it below as well. So that's the breakout structure. Okay. Now, this is some sort of an internal low, right? If the market can break and close below that internal low, that's a change of corrector. Means it indicates a potential pullback is starting. Okay, can follow, yeah? Where this pullback may potentially terminate or where the pullback can potentially come into previous demand zone. Okay, now you see a gap. Okay, that's basically your fair value gap. Okay, so that's where the demand zone is. Okay, so when the pullback eventually starts, right? Maybe you have an internal shift here. Where can you target your short-term trade? Here. You can follow the top process, right? Okay, but once the price comes into some sort of a demand and start to show you a sign of a turn, okay, then that pullback may have completed let's look at realignment. Can follow the thought process, okay? Hopefully that's all clear. Good. Okay, so up to here is everyone, more or less quite clear with the way you can use this to actually define market structure, identify, with various time frame, the direction that you can focus on. Okay, or any questions that you have. Okay, put it into the chat or question tab. Okay, we do have like about 5 minutes, right? For you guys to really ask question on it. Any? All good? All good, no question. Okay, so if no question, I hope kind of today's session here give you a clear idea about market structure, using all the block to kind of analyze the chart, identify areas of entries and things like that. Okay. Definitely you need to practice a little bit. Okay. But I hope today's session give you that clarity in the definition of things, building that foundation, to understand market structure a little bit better, and give yourself that clarity. Yeah. So if there's no questions, generally that's about it from my side. All the best, right? And of course, if we have the opportunity to share with you a little bit more in the future session, looking forward to connect with you guys a bit more as well. Okay, so that's all. All the best, and as mentioned, I'll see you guys in the future. Potentially to share with you a little bit more on this as well. Okay, so see you guys. Bye.